right. Hello, and welcome to the Bitcoin Policy Institute podcast. Jack, thank you so much for joining us.
My friend, David, thanks for having me, buddy. I'm happy to be here.
Yeah, this is my first time doing a BPI podcast. I know we've put out a few before, um, but look, there's so much we could talk about. But I do want to start with you and with Strike. It's such a huge part of our work at BPI is making the case that Bitcoin is good for the United States. And, for a while, the shadowy supercoder narrative was, super prevalent. And it was clear that I think in Washington, there was a bit of a disconnect where Bitcoin is this thing that's taking place online. And I think some really cool Americans and American companies were not getting necessarily associated with Bitcoin. So you're a shadowy supercoder on some level, but you're also an American. You're a guy from Chicago. You're an entrepreneur. And it's why we invited you to speak at the first policy summit we ever did, because I think when you read about Bitcoin, you think one thing, but it's just another entirely to see an American entrepreneur who's leveraged the Bitcoin network to provide an awesome service for people. But given that our audience is likely to be staffers, policymakers, people outside of maybe the Bitcoin world, let's start with just who you are. What's your Bitcoin story? What is this company Strike that you've created? Let's just start there.
Sure. And what an honor, by the way, your first podcast. I'm the guest. I'm going to hang that on my fridge.
Same here. Wouldn't want it any other way.
Yeah, there you go. My name's Jack. For those that don't know, I'm the founder of Strike. I play the CEO role from a day-to-day at the company. My story, I've been in Bitcoin for just about 12 years. And I'm 30. So the quick math on that is I got into Bitcoin when I was 18 years old with my dad. So I come from a history of Chicago finance where I was born and raised. And just a quick backstory on Chicago finance, maybe relative to a culture like New York and Wall Street, is we're talking about agriculture, commodity, risk transfer products, derivative products. Just to even simplify that further, that's like corn futures. That's like the wheat pit. That's soybeans. These are the commodities, the assets that we consume and then we eat and that we digest. And my grandfather, my father, a lot of my family spent a lot of time over the last 50 years building what's known as derivative products, risk transfer products. That's the futures contract, the options contract. And really we want the corn farmer to be really good at making corn because we want people to be healthy. We don't want people to be sick. We want to have reliable commodities that we can consume and know no matter what, whether we're going through COVID or it's cold or it's warm or it's rainy or it's snowy, that I can have a burrito and have corn in it. And how do we take the future risk to price something like corn and transfer that into a marketplace of experts and traders and leave the corn farmer to just farming corn? And that was a market that had to be built. And so when people say, is trading good for the world? Is finance good for the world? Are markets good for the world? This was a marketplace that solved a really core problem, which is we have commodities that need to be priced into the future that we consume, and we don't want our tummies to be as volatile as markets can be. So how can we transfer that risk into a market, then make that market efficient, make it liquid, make it regulated, make it accessible to people, make it fair, equitable? And that's where I came from, was Chicago finance. These are brick by brick, salt of the earth guys that really care deeply about using financial instruments and financial markets to solve core problems that do good for humanity. And so that culture got Bitcoin fairly early in the 2012, 2013 era. And part of that was my father. So I was dropping out of college at the time. And I was a chess player. I was going to pursue a chess career. And unfortunately, I couldn't get through French literature class without throwing a fit. And my dad said, hey, before I spend another, future mortgage on tuition for you, why don't you try this Bitcoin thing with me? I don't want to send you back to university. And I did. And that was 12 years ago. And through that, it's obviously changed my life. And I've gone on to found Strike. And here I am talking to David.
Yeah. So you've done this a million times, but just let's assume that somebody's listening to this and they really still don't get Bitcoin. They see that it's, more expensive than it's ever been. They definitely know that Donald Trump and the incoming administration are signaling positively about it. Um, but I think the major conversation around Bitcoin has really shifted to Bitcoin the asset rather than Bitcoin like the network.
Mhm.
So could you run our listeners through just the high level distinction between capital B Bitcoin, lowercase b Bitcoin, and maybe talk a bit about kind of Strike's role in the Bitcoin ecosystem?
Yeah. Well, I think first to understand the difference between capital B Bitcoin and lowercase b Bitcoin and this concept of an asset versus a network brings me back to gold, actually, and why I think gold failed us in many ways in our modern day economy and is not the world reserve currency that it maybe once was. The reason is because when gold was operative in a local economy where I was transacting locally with my butcher, with my tailor, with my grocer, and I can physically hand over a gold coin and settle with that bare physical instrument, gold was great. It was governed by the physical laws of the universe, right? So it was very hard to make more of it. Everyone had equal rights that could acquire a gold coin. It was very easy to keep track of who had what because you either had the gold coin or you didn't. And so it worked well as a monetary instrument up until the point where we needed to scale to billions of people, scale to economies on the internet, have digital transactional use cases. That was when we had to deposit gold into banks and corporations and centralized institutions. And that is when gold failed us in many ways, David, is because at the end of the day, in today's world, you have to rely on a central party to achieve transaction finality for gold. And this is especially apparent in, half of the world lives in under some form of authoritarian regime or some party that wants to act against their best interests nefariously. And people can't use gold in a scalable way as a money or currency or monetary network that acts in their best interest. You're reliant on your government, on your bank, on a central corporation to operate at the scale that the economy desires today. Now, Bitcoin solved this, and why people say the digital version of gold or the better version of gold is not only is Bitcoin a physical bare instrument, there's only 21 million of them, it has similar properties to gold, but it's also a digital network as well. And that's the piece that gold is missing. What's the gold monetary network? It's you and I, David. It's humans. It's that we have to get on a plane, we have to drive a boat, we have to ride a car, we have to walk across town to hand the gold somewhere. Bitcoin has accompanied with the asset a network. And it's the combination of both a digital asset and a digital network, which allows it to solve for the one core weakness that gold had, which is how do I achieve transaction finality without having to trust a bad government, a bad corporation, a bad bank? And that's a problem that everyone in the world has. And that reliance and trust has proven to be a core issue in serving the monetary function that we rely on to function as society. So that's the big difference. That's the difference between capital B and lowercase b Bitcoin. And that's why sometimes it gets confusing because are you talking about the monetary network or the monetary asset? And us as a Bitcoin community, we've tried to improve our rhetoric over the years. And as a company at Strike, we try and focus on both. We see immense value for the American people and for the globe in having both a monetary asset that is digital, that is a lot harder and scarcer than gold, that's more divisible, easier to verify, easier to transport, cheaper to transport. But then I think the network is also of like a public utility like the internet. It's a digital network where as opposed to brokering communications with a lot of the American ideals of there's a freedom in coming and going, there's equal rights, there's a freedom in opining. It's the same exact thing, but for value. So we think of the Bitcoin network as the value transfer protocol for the world, similar to the internet as the communications protocol for the world. And that's an entirely different asset that Bitcoin brings to society that needs work and needs support and needs products that meet consumer demands. And the combination of the both, I think, is going to change the world. But that's the core idea. And it's lost on people sometimes. But gold didn't have that. Other physical instruments like corn doesn't have a network, but
Right.
Bitcoin does.
It's interesting. I was reading an article about the fall of the Assad regime, and one thing I thought was really notable about that was apparently he had about $100 million in gold bars. Now, obviously, not fans of Assad, but it's really interesting, right? Like this guy, and it sort of highlights exactly what you're talking about. Without this embedded network to transfer gold easily, what function does it really serve? If you have to, flee, you can, leave, go anywhere with your private key memorized, and you can move, billions of dollars of capital touching nothing. With gold, you can't really do that. So I just thought that was an interesting sort of, like I wonder how many more stories like that we'll really see. Like people that are holding 100 mil in gold, at a certain point, you would expect all of those people to be preferring Bitcoin for that sort of investment use case.
Yeah, if I were talking to Washington and our nation's capital, I would say there's an undertone to things like peer to peer and that trusted intermediaries are bad and Bitcoin needs to decentralize and get rid of government. The reality is this is that if I needed to trust a government, a bank, or corporation in order to conduct finances and be part of the economy with gold or an instrument of such, let's not use America as an example in Washington, D.C. Let's talk about the 4 billion people that are living under some authoritarian, some surveillance state, some bad actor that's acting against their best interest and is abusing the access and dependency of the monetary system that we've built to their advantage to extort people. And that is where something like peer to peer and not needing trust, because trust works great until it doesn't, right? It's one of those things where you elect the wrong person, a corporation makes a wrong decision at the board meeting, a bank all of a sudden doesn't have the right incentives, and your inability to conduct any economic activity. I mean, money is our time and energy in an abstracted form, right? It is our labor, our effort, our future. It's the market good that represents the future needs we have, right? I'm going to need to eat. I'm going to need to live under a roof. I'm going to need to transport myself. My monetary cash balance is the proxy to the future of my life. To effectively sanction me from being able to be an economic citizen is a very dangerous threat to have as an option, and it is often abused. And so when I read the Bitcoin white paper and I see peer to peer without the reliance on a trusted party, to me, that means this is a bearer asset that has found a way to attach itself to its own native network. So the fact that we can digitize money makes it so that we don't have to trust a government or an institution or a corporation, which is such a massive leap, especially for those not in the United States of America, which kind of brings me to how you and I met, which is why one of the reasons I think this thing's so American is it does promote freedom ideals. If we're the leader of the free world and the leader of democracy, something like this, both the asset and the network, I think push American ideals, not only in this country, but globally. And so I would encourage DC to not get caught in the Twitter thread rhetoric and, the peer-to-peer and not relying on a trusted party. Its application is so that, all over the world, you can actually achieve transaction finality without relying on anybody else.
Yeah, and I think the parallels to the regulatory environment in the late '80s and early '90s around the internet are just really astounding to me because it just seems like the exact same sort of setup. We were so concerned as a country for so long that giving everyday Americans the ability to tap into this open protocol for communications was a risk like way too great. We thought that with that, terrorists could now communicate and plan, that money launderers could more easily operate. I mean, it's sort of the exact same criticisms that people have levied against, Bitcoin, this value transfer protocol. And the lesson of the early '90s, I think, was just overwhelmingly that the benefits outweigh the costs. Like, I think so many people hyperfixate on these tangible things that a bad actor could do with Bitcoin. And they really don't appreciate the sort of salutary things that a good actor can do with Bitcoin. And so I think we're seeing more and more recognition of that. When we decided to make commerce on the internet illegal, to spend tens, if not hundreds of billions of dollars on, broadband programs, on, initiatives by the federal government to get more Americans online, we thought, our view basically was, this is a tool, and tools mirror humanity. They're not good or bad, but this tool has these certain values and freedoms embodied in it. And so, on net, giving people globally the access, the ability to communicate freely, justifies that, like any tool, somebody might use it for poor purposes. And so I think that's super important, your point about this, because I get that question a lot. It's like, isn't Bitcoin supposed to be, against the government? And, your whole think tank is making this argument that Bitcoin is good for the government. So yeah, I mean, I think I'm glad to hear you say that. I think it's important for people to recognize that, you know, not everybody is blessed to have the US dollar as their currency. Not everybody is blessed to live in a liberal democracy. And so, the questions of, sort of how Bitcoin changes the relationship between the individual and the state, it's so much clearer when you take that international view. But before we go deeper onto some of this, I want you to talk about Strike. I've heard people pitch Strike to me as like it's Venmo but for Bitcoin. I don't know if you align with that, or you take issue with that. I've heard people describe it as the Cash App of Bitcoin too. But yeah, so we've talked a lot about Bitcoin, this difference between the asset and the sort of digital bearer instrument, the network that facilitates the peer-to-peer exchange of that bearer instrument. Where does Strike fit into all of this?
Yeah. So we were founded not too long ago with an emphasis and focus on the network piece. So as I've said, I've been in Bitcoin for a very long time, and I didn't see enough focus and entrepreneurial effort on the network. There's a lot of the asset. There's a lot of people selling it and selling you futures contracts on it or giving you leverage on top of it. But there wasn't enough of, hey, can this bring down the cost of cross-border payments? Can this network pose as a legitimate competitor to something like Visa and MasterCard and drive costs down and enhance small business? And so we were founded to build technology for consumers and solve problems in the marketplace with the network piece. I would say fast forward to today, the only added part to that story is when FTX collapsed and Sam got caught for all the crimes he committed, when BlockFi went down. We were recognized as a noble, principled, ethical, moral actor in the Bitcoin space that Bitcoiners and those that are interested in the industry wanted to do business with across all financial services in the space. So we became a big brokerage service. We sell a ton of Bitcoin to our customers every day. We custody a lot of Bitcoin for our customers. We move a lot of Bitcoin on both the Bitcoin network and the related networks like the Lightning Network every single day. We have a cross-currency payments product. So we describe ourselves now as a global Bitcoin financial services firm. We're one of the most regulated companies in the world. We've got, I think, the most, you'll have to fact check me on this, but I think we had the most money transmitter licenses in the United States for a Bitcoin company as of 6 months ago. We're operative in over 100 countries. We have a European operation and a UK operation as well. And we offer stablecoins in a lot of our markets like Africa and Latin America. So at this point, we are one of the leaders, if not the leader, in global Bitcoin financial services. But I think what makes us unique is our focus on Bitcoin, both the asset and the network, as opposed to some of the other cryptocurrencies. We do not support or sell Dogecoin or Solana. We only focus on Bitcoin. And our belief is that this technology, both the network and the asset, is going to it's the opportunity, as I would describe it, both for our customers and the technology for us as a company.
Yeah, I want to get deeper into the regulatory stuff that you guys have done. But I want to pause here, like, for, again, someone who's listening to this, you're not, a Bitcoiner, you don't, the Lightning Network, you've maybe heard of, but you maybe not. What Jack's business, is best understood as, I think, is innovation and competition. You and I have had a lot of private conversations kind of lamenting the sort of duopoly that Americans are confronted with respect to payments. And I think anybody can appreciate and understand that, you know, we want to pursue better ways. Like, why do we give these sort of arbitrary institutions a rake on every single transaction that an American makes? transaction fees are wildly regressive. They impact smaller businesses and people with smaller bank accounts way more than they impact wealthy people and large corporations who are fine with the cost of doing business. But I mean, would it be fair to say, like, fundamentally, like, the more that the proliferation of Strike puts competitive pressure on other payment providers because you're able to help people, make transactions for cheaper than your alternatives. Like, that is broadly, like, from a non-Bitcoin aficionado perspective. If I were a policymaker, that's how I would sort of understand Strike. And so,
Yeah.
you think that's sort of a fair characterization? Like, would you say that Strike is sort of a competitor to the Visa MasterCard duopoly, or that maybe Bitcoin more broadly is?
Yeah, yeah. I'll tell you one of our founding stories that backs that is so the Lightning Network. For those that aren't aware, it's technology for Bitcoin that makes the transactions near instant and near free. So it speeds it up and makes it extremely cheap to use. So I was one of the early developers that was working on this technology and testing this technology. And there was another developer. I'm based in Chicago, and there was another one based in the UK. And we were testing these payments between each other. And it took us a few days to realize, wait a second, aren't we technically sending value across borders to each other instantly and for free? Isn't that a big deal? And we thought for a second, we're like, well, Visa can't do this instantly and for free. Western Union couldn't do this instantly and for free. Swift couldn't do this instantly and for free. How is it possible that we're doing this instantly and for free? And that was when this thesis started to develop for me, which is, wait, you have a physical instrument, just like your cell phone or like your shoe or like a gold bar, but it's digital. So it's bytes of data. And so I can actually throw the bytes of data, quote unquote, from Chicago to the UK much quicker and cheaper than I could throw a shoe or my phone or a gold bar, right? I'd have to get on a plane to get it to the UK. And then the fact that it was accompanied by a network that was able to clear these payments in so fast and so cheap, what I did is I told my buddies, like, all right, here's what we're going to do. I'm going to build software that's going to just debit $10 out of my Chase account to send this payment. And you're going to build software that's going to credit £10 or whatever the equivalent exchange rate was to your Barclays account. And then we're going to do the same thing. And it's going to look like an instant, cheaper cross currency payment. But behind the scenes, instead of using a network like Visa or MasterCard, we're using Bitcoin. And it doesn't make the experience worse for the customer. It doesn't expose them to any unnecessary volatility. It's just using a better public utility, an open source public utility that brings the costs down and makes life more efficient for the end consumer, which is what we all want in this world. And that's what innovation is all about. And that was one of the founding stories. So obviously we clicked the button and it worked. And we were making instant and near free cross currency payments. And then you go into, well, how much does it cost for me to do this, but to Nigeria or to El Salvador? And you realize the cost, not only in a percentage terms, but the smaller the payment gets. So maybe on average for a $500 payment, it's 5 to 10%. But if you wanted to send a $10 payment or a $15 payment, you're paying 50 to 75% fees because a lot of the costs are fixed. Right. And so the smaller the denomination of the payment. And so we realized not only were we bringing the general cost down and the speed down of settlement, but we're unlocking new markets. There's a lot of immigrants that migrate here to America that are working low wage jobs that want to remit $20, but they're paying 60% in fees. So we're unlocking new markets. We're fixing existing markets, and we're finally allowing for competition to existing duopolies and monopolies in payments, whether it's domestic here in America, in merchant brick and mortar, whether it's cross currency. And so that was a lot of the founding was, why is no one working on this? Why is no one using this public open network that can achieve what Visa can achieve, but it's free and it's open source and anyone can work on it? Why are we not rebuilding settlement systems on top of this and driving value to the small business, driving value to the consumer, unlocking new remitting markets, keeping more money in the pocket of those sending it home? And that was the first
Yeah.
products we launched were grounded in those type of ideas.
Which makes complete sense, and to me raises a really important question, which is, I want to know how much this cost you on a compliance and regulatory side. Not necessarily a dollar amount, but you mentioned that you're one of the most regulated companies in the world. Like, one thing I've always found wild is, how difficult it is to compete with Visa and MasterCard. And you were sort of an early pioneer in this concept of, hey, there's another protocol for exchanging value. Maybe we can, let anybody in the world pay anybody else in the world, and we can do it fast, cheap, and with, final transaction finality. Um, but it wasn't like you could just code this up and launch it. Uh, you've had to do a lot of regulatory and compliance stuff. And I want you to sort of tell that story to the extent that you're comfortable, because yeah, I would just have to think that there is a better way than you having to get a license in every single state. Like, can you just talk us through the how you went from this idea and this vision and then building it? Great. What were all the steps you had to take after building this company to to do all of this legally?
Yeah. Well, I think firstly, it's grounded in the ambition that we want to make real change, scalable change. We want to change the world for the better. We think we can. And I always knew that, listen, as much as I may want to, I can't change the world from a jail cell. Right. And that's kind of my joke to say we knew we had to be compliant. We knew had to follow the rules, and we wanted to. We in no way wanted to be anti any government or against any bank. We knew we had to follow the rules, and we were okay with that as long as we were given the opportunity to change the world for the better with this new technology. And so ever since I founded it, we immediately started applying for licenses. We are regulated at the federal level as a money service business, and state by state as a money transmitter. So you get independent state licenses and you deal with each individual state regulator. So we have, call it round number 50 money transmitter licenses. We have a registration as an MSB at the federal level. Then obviously for us to run our business in Europe, entirely different regulators. Then the UK, entirely different regulators. So to have a global commodity, a global money, and then a global network, a global utility, and combine those two in our products and our services, we all day are working on compliance frameworks, making sure that regulators understand what we're doing. A lot of this was education as well, where we were being regulated as if we were Coinbase for a lot of our products, where our customers are buying and selling, but our customers are making cross-border payments. They're not. So there's a lot of our products where we felt we fell into a bucket that didn't maybe make the most sense, but the world just wasn't necessarily ready for this type of technology. And I've tried to make the pitch that, listen, I think we're all on the same team. Like, we've tried to use government interference to slow down Visa MasterCard duopoly. We've tried to use government to lessen the wealth gap in our country. And I think it turns out things like Bitcoin may be more effective at that. And I'm trying to help, and I'm on your guys' team. And a lot of the regulators and government reaction was, well, we don't have a policy or a framework or a government body that can aid you and support you in this. This is what we have, and you're going to have to be a money transmitter. And so that's what we did. Obviously, I'm hopeful that we can change these things because competition's helpful in bringing costs down and driving innovation. But that was our story. And yeah, to me, it's just important, the pride and compliance and stuff, to the Bitcoiners, they're going to be like, that's weird. That doesn't sound very Bitcoin. And to maybe folks in DC, that may be a little off-putting. The reality is we don't want to harm anyone. We're clear about that. Whatever the rules are, we want to follow them. We think Bitcoin can change the world for the better, and we wanted our shot at achieving that. And that's been our compliance journey through, multiple administrations and where we are today.
Yeah, and I mean, thinking about that process, right? Like, you were basically told, "Sorry, there's nothing better. We got to regulate you this way." And you're a man on a mission. And you said, "Okay, fine. You tell me how high to jump, I'll do it." And you were able to do it. But looking back on that process, I mean, a few things immediately come to mind. One, why do you have to get a money transmitter license in every single state? Right? I know people have talked about and proposed a sort of federal money transmitter license. It sounds like that would have been wildly helpful to you when you were on your
Mm-hmm.
compliance journey. What can you tell our audience? I guess, one, any regulatory sort of hurdles that you faced that you thought were just kind of the result of the law failing to keep a pace with technology, like where you thought, geez, this is a really bad way of doing it. We're sort of being de facto penalized because we're innovative. And then a related question: what to you, what ideas do you have about, as an entrepreneur, ways that we can sort of solve both of these functions, like having laws that protect people and regulating businesses to protect consumers, but also not creating an onerous like patchwork of laws so complex that only like the genius Jack Mahlers with unbridled sort of ambition and enthusiasm and time, like it's just there's got to be a better way. So I want to know if you have any anecdotes you could share about laws that you felt weren't fit for purpose, and reflections on what regulation can look like for the next strike, or for the next young kid with an idea of how to change the world with Bitcoin.
Yeah, I would say, firstly, there's no doubt that it's an objective truth that the amount of capital required to start a business like this, you have to raise the right amount of money with the right amount of people, hire the right people. We got very lucky in hindsight that we were able to pull this off and be in a position to serve products to customers in America, which did feel wrong. I think we should encourage technology builders to build cool stuff on open source software that rivals big corporations, that pushes American ideals like freedom. We want it to be more inclusive. We want it to be more equal. So that felt a little wrong. I mean, it took us years to get these products to market. While the technology was ready in my bedroom, the years was the compliance and the regulatory. And this costs millions and millions, and oftentimes tens of millions of dollars. I can't say we're actually operative in every single state, David. The one we're missing is New York. So still to this day, we've spent an incredible amount of money on that state alone. Our application's been pending for 3 years. And, the NYDFS has been nothing but polite, and we've been working with them and we have a good relationship, but still it goes to show that you need, half a decade and tens of millions of dollars to get a product to the market and just try to innovate and help people in this space. I would say some anecdotes that might be useful for the public. The Bank Secrecy Act and the KYC process for our customers, it's got increasingly invasive and onerous, where our customers, I'll say this, we have not solved our fraud problem. I operate a product in over 100 markets, right? And I operate a product, if you want to just compare the Western markets, in the US, the EU, and the UK. I have one market in the whole world where I have a fraud problem. What do you think that market is, David?
My guess would be ours.
It's the United States of America. And we've had that fraud problem before we were a regulated entity, after we were a regulated entity, after we were one of the most regulated entities, after. So point being is that we don't see the Bank Secrecy Act improving our ability to catch, ACH fraud in real time. Obviously, knowing some information about the customers allows us to cooperate with law and submit reports on customers of suspicious activity. Those are known as SARs. We comply and do all of those things. But I do think rethinking something like the Bank Secrecy Act, or the information we want to collect, it might be worth it, because it's hard for me to sit here and say that framework has solved for keeping fraudulent activity off of our platform and every other platform in the country, right? You listen to any of these quarterly earnings and board meetings and you read all the financial reports, and even the biggest companies in the world, it's just a bottom line expense that anyone has accepted in America. So, I mean, that problem spans across a lot of things. We can probably build better payments infrastructure as a country, EU, SEPA payments, UK faster payments. This technology is better than ours. But also just revisiting, what are we trying to solve with these regulations and these rules? Because what it does to our honest customers is they can't actually benefit from this technology without us getting in the way. So we have customers that maybe sent $1,000 home and they want to send their $1,001 home, but that's a certain threshold that requires me to need to see a proof of address and their last air conditioning bill. And I get the intent, but you're getting in the way of them benefiting from the technology. You're getting in the way of owning more Bitcoin. And I could see that potentially as one example of an area to improve where people would assume, man, you're asking everything about these people. You must have no fraud. And it's like, well, you should ask me, Jack Dorsey, everyone else in the space. I wish that were the case, but unfortunately it's not.
Right. Not to mention, you're talking about a law that was written before the proliferation of the internet, a law that was written when $10,000 meant something. I mean, I think just looking at the, inflation adjusted threshold is, I mean, in some ways, like I sort of joke that, like, if all the Bank Secrecy Act had done was just have a provision that $10,000 requirement would, adjust with inflation, it would still be a concern, but, like, we'd be in a completely different universe. Like, we wouldn't be talking about, a migrant's 1,001st dollar that they're sending back home as remittances. We'd be talking about, $100,000 or $150,000 transaction, which I think to most people, you know, I guess the Bank Secrecy Act probably made more sense, when it was written than it does now. And it's clear, I think, to anybody that you can't rely on a law that was written, before the internet,
Yeah.
basically, to regulate what are fundamentally internet businesses.
And to me, the story here is, listen, you'd have to assume that whether it's a regulator or a politician or president, they're trying to help. They're trying to serve the country. They have people that voted them in that have demands and have concerns and have needs and have pains and have stories, and they're here to help them. You'd have to make that assumption. But I think the story for me is, like, let's take Bitcoin, for example. Here you have an asset that you don't have to pay property tax on. It doesn't cost you to custody it, right? It's accessible to anyone. You could buy a penny worth of it. It can measure a grain of sand. It can measure a professional sports team, and billionaires can be buying it. So accessible, equal, available, cheap to store, the best performing. That helps close the wealth gap, for example, which is something that every politician and government in America and regulators interested in addressing is, how do we get people living paycheck to paycheck? How do we keep them out of living through inflationary pressures? How do we make sure that their groceries are affordable? That's one example. Another example is competing, giving aided competition to Visa MasterCard. How do you take an open source public utility, and what if when you walked up to a Whole Foods, you had Visa MasterCard, Amex, Discover, and then this new one, which anyone can build tools on. Anyone can build a wallet that appeals to a certain demographic, a certain community, a certain small business. Imagine the millions of different tools and applications that could help drive costs down, help put money in the pockets of the small businesses. This is the type of innovation that's actually net positive with this technology as opposed to net negative. And I think what you find is people that are just trying to help, and I don't question their intent, but how do we evaluate and measure how helpful these things that we have in place are? Are there KPIs we want to track? How do we numerically justify that? What's the process in which we look back and reassess if we're enabling entrepreneurs and consumers and businesses to benefit from this technology, which I think is very pro-American? And that's what I'm kind of curious to see if this new administration, or you guys at the Bitcoin Policy Institute, can define these procedures, have these conversations. Because there's plenty of examples that I have as a company, but I think that's really the high level for me is people are trying to help, people are trying to stop bad things from happening, but what are the good things that could happen? And are you also getting in the way of that? Is there a way where we can enable the good and stop the bad, or what's the best approach?
Right. So, before we get into sort of, I do want to talk about the incoming administration and some of the opportunities for Bitcoin related policy. But I think something that's worth drilling into here. It's just, red teaming this and trying to listen to what you're saying. As if I were sort of somebody that had never met you, had never thought much about Bitcoin, I think one of my questions would be, if you're right, uh, won't Visa and MasterCard be forced eventually to capitulate and build products and services on the Bitcoin network? Like, again, if I'm sort of uninitiated to all of this, but I'm taking what you're saying at face value, you've found this network that is just way better for payments. So what does that landscape look like? I mean, I think people have always talked, as long as Bitcoin has sort of had any mainstream relevance, the meme has been, oh, the institutions are coming, right? The banks are
Mhm.
coming. I've heard every argument and narrative applied to the banks this is the Bank Policy Institute, after which we are somewhat ironically named. And I've heard like every type of sort of conspiracy theory, right? They want to push anti-Bitcoin stuff because they're scared of competition. But I've also heard people say, well, no, they don't want to kill Bitcoin. They want to slow it down so that they have time to pivot and build competing services on top of the Bitcoin network. So, like at a high level, how does that game theory play out in your mind? Like, if the Bitcoin network is as robust and profound as you say it is, it really is this step function increase in our ability to make transactions peer to peer. How far off are we from a world where Visa and MasterCard are trying to plug into the Bitcoin network and use their scale basically to compete with people like you?
Um, I mean, to be honest, my opinion is this technology replaces them, not necessarily something they can use. I mean, these are what's known as protocol businesses, right? So Visa and MasterCard, their settlement protocol. And that's my assessment of something like Bitcoin as well, where in the flow of funds, you can have a customer that has deposits at JP Morgan Chase that's issuing a payment to a merchant that has an acquiring account at Bank of America. And instead of brokering that settlement through a protocol and a network business like Visa or MasterCard, that settlement and interoperability is brokered through this open utility for the world, which is Bitcoin, which drives costs down. I think the reason we haven't seen as much uptick and adoption is because of the entrenched network effects and economies of scale that these businesses have achieved. The reason you get so many free flights, so much aged, nice Napa Valley wine, so many cool box seats at your favorite NBA team, whatever rewards you're getting for swiping your credit card, what happens is the fee that the merchant is paying, that's passed down through the chain of the network and the issuing bank and eventually gets to the consumer that's spending. So if you're getting 3% cash back on everything, that's because your merchant probably is paying 4% to accept your payment. And the banks and the network are keeping some of that. And then to keep the consumers engaged and rallying politicians to not take their rewards away, they're giving it back to the consumer. They're giving them free wine. They're giving them free stuff. And so, what's the incentive for a consumer to go to an open source public utility that's not giving them free stuff? How do you change that level of consumer behavior that's so entrenched? That's really the question, is that these networks have really, I mean, this is aggressive terminology, so take it with a grain of salt, but they're really bribing the public to use them, and the merchants are footing the bill. So the merchants are really upset, and they're going to your local senator, your local politician, the president, and the merchants are saying, small businesses are losing 2, 3, 4, 5, up to 10% from these card networks. But the people that are voting are saying, I love my free wine. I love my free flights. I love my free tickets. I love my cash back. And so it's, how do you unseat that level of entrenchment? And at what point is the desire to use a different network going to be feasible and outweigh the benefits? That's kind of where I think we see the playing field. But I'm just a big fan of competition. I think that this thing could sit next to the other networks. It doesn't have to be one or the other. And I think innovation and technology eventually wins out as long as it solves real problems. And that's how I estimate the field and where we are today. I think open source technology and innovation is more effective than things like the Durbin Amendment. But we'll see.
Yeah. So let's move into the next administration and talk about the strategic Bitcoin reserve. Uh,
Mm-hmm.
this idea has gotten a lot of attention. It is sort of startling how quickly this has gone from a pie in the sky idea to something that it's like Rachel Maddow and MSNBC are writing. They're doing rebuttals to like our podcasts basically, and they're like it's wild how quickly this idea has accelerated, how much it's captivated people, both who are in favor of it and people who aren't. Um, to me, the biggest question I'm getting about the SBR is, why does America want to do this? Doesn't this just like I was talking to a journalist today who said, I understand why, as a Bitcoin holder, you would want the government to buy Bitcoin. That would be good for your investment potentially. But why should America be a Bitcoin investor? And I wanted to just to pose that question to you. Like, should America be a Bitcoin investor? And if so, like, why?
Yeah. Well, I think firstly, it's getting a lot of traction and attention and momentum because it's grounded in solving a real problem and a big problem, which is our deficits. That's the initial intent, is how can we solve for the fiscal deficits, the amount of debt we've accumulated as a country. I think the best way to understand that is looking at our debt to GDP. The debt to GDP is a metric that tells me how much have we borrowed from our future versus how much growth are we producing to pay it back. And when you have debt to GDP nearing 130%, you've realized you've over borrowed from your future without the correct investment in the growth to pay it back. So if you don't have enough growth to pay the debt, an easy answer to solve the problem is find more growth. And that's what I think we see in Bitcoin is it's the fastest growing, best performing thing you can own in human history, and especially over the last 15 years since it's been invented. And if you take a metric, David, like 60% annualized returns, Bitcoin has been growing over the last 10 years on average. That is something that's vastly outgrowing the amount of debt we're issuing, right? So the question to the American public is this: do you want to curtail the debt and spend less? What does that mean for you? That means no defense budget. In case we need to go to war, in case someone attacks us, we can't defend ourselves. No social security, for example. These are things that we as a country are spending money on to support the quality of life that we've promised for the current citizens and future generations. And so the question is, do we want to retract some of the things we've promised and given to the American people in order to bring the debt down and keep the growth at this certain level it's at? Or do we want to invest in more future growth while retaining the quality of life that we've granted and given the American people? And I think the proposal for owning Bitcoin is here you have something that's vastly outgrowing the debt required to issue the quality of life that Americans have and love. That is on its face why it's appealing, why it's interesting, why it's garnered momentum, is it's a possible solution to America's biggest problem, at least from a fiscal standpoint. What I don't think is talked about enough when we talk about America owning Bitcoin and the strategic Bitcoin reserve is, David, I think this would be the biggest announcement, economic announcement in American history, potentially. It would be on par with Nixon in 1971, except it'd be positive. And I don't hear that rhetoric enough in DC or on mainstream media. What I mean by that is in 1933, America made a massive announcement. What was it? It was, we're confiscating your gold. We're threatening property rights in this country, arguably. In 1971, America made a really big announcement. What was it? We're divorcing ourselves from the gold standard, which in more layman terms is we're divorcing ourselves from being governed by the immutable laws of Mother Nature. And we're going to enact our ability to debase your currency and inflate your goods and services. In 2008, America had a big economic announcement. What was it? Is we've done discovery and learned that big banks acted irresponsibly, but we're going to bail them out and burden the cost of their mistakes on the public. Now, in 2025, if America makes a big announcement, what is that announcement? It's not defensive. It's not reactionary. It's not against the best interest of the public. It's the opposite of all those things. It's positive. It's progressive. It's we are pro-technology. We're pro-growth. We're pro-innovation. We're pro-freedom. We're pro-inclusion, equality. We see a technology in its nascency, just like the internet was a couple decades ago, that we can invest in, that can address our fiscal situation and promote the entrepreneurial spirit and the innovators in this country. We want the next Amazons and the Googles and the Facebooks to be founded in this country. We want the fastest growing technology network to be mined in this country. This is pro-jobs, pro-industry, pro-energy, pro-innovation. That to me is very inspiring because, David, also governments around the world, they own 2, 3, 4% of the Bitcoin network. So who owns it? The people, the public. The public had access to this long before Wall Street, long before governments, long before corporations. So this is an announcement that acts in the best interest of the public, that actually supports the interests of the people. It's offensive, not defensive. It's progressive. It actually goes to solve. The last thing I'll say is I'm 30, as I mentioned earlier. All of my peers, no one's close to owning a home. No one's close to living a debt-free life. When you look at KPIs to measure the health of society, when I see child per woman crashing, when I see life expectancy flattening or in some areas going down, when I see obesity rates going up, when I see divorce rates going up, when I see suicide rates going up, when I see consumption of antidepressants going up, I can speak from firsthand experience that my age group is getting crushed. Because the reality is the boomer class has all the wealth in our country, David. They're the ones that own 5, 6, 7, 8 homes. If you're, who's going to win in a bidding war for a house? The guy or girl that's worked 50 years in the workforce or 5 months out of college? No one my age owns a home. No one's debt free. People can fall in love. You're not going to be able to finance a family. And so I think that my age group also has a serious interest in solving the fiscal deficits, in building a strong balance sheet for this country that we can finance a life that we think is worth living. And all of our jobs and our interests and our talents are technology related. So I would love this country to say we're pro technology. We want to encourage entrepreneurship. We want to encourage innovation. We want to be pro industry, pro energy. We want to address the fiscal situation because we want you guys to be having more kids. We want you guys to be owning more homes. We want you guys to be less depressed and less sick. And I think if we can solve the money and solve the deficit problem in this country, I think we solve at least 50% of the hardest problems we have today.
Yeah, I mean, two quick notes I would sort of add there. One, I think the process that Jack is describing of America sort of borrowing too much from its future state. Look, this is like almost a law of physics. I don't think that Jack is really making an indictment on any particular government or policymakers. It's just a law of the universe that when you can print money and your political incentives, I mean, if you're a leader in a democracy, you have to be attuned to the present, even though your obligations may be far reaching into the future. You've got voters now, and so it goes back to world history. We've never seen a fiat currency sustain itself really long term without sort of losing 99% of its value. It's actually a bit ahistoric that we've managed to keep ours going. And so, if you're listening to this and you're thinking, gosh, buying Bitcoin to save the dollar, buying Bitcoin to reduce the debt, yeah, that's ridiculous. Surely there's a better solution. Then my question would be, what? Because I have never heard a sensible proposal for fixing our debt crisis. I think the Elon, the Doge stuff is interesting. We can certainly spend less. But it's not like there's a litany of amazing proposals to get us out of this situation. And if you're hearing this and thinking it's a Hail Mary, it might be. But we've got a clear pass into the end zone with this, and I don't really see any other sort of policy or plan other than sort of crossing our fingers and just hoping that the market will sustain this belief in America forever, despite a rising debt to GDP ratio.
Yeah, well, I don't mean to burst your bubble, but that's not going to work either. And it doesn't matter how much you believe. I think, talking about divorcing ourselves from the gold standard, and you can stand on either side and argue philosophically all you want, but we're talking about being governed by physical reality. And the physical reality of our fiscal situation is it's unsustainable. And to hear that now from the chairman of the Fed, from Janet Yellen in the US Treasury position, now we know that that's not an idea, that's not an opinion, that's not a speculation, that's a fact coming from those that are in charge. So I think that's the reality we're living in. And my encouragement to those listening is to think in first principles. Listen, when you borrow money, you are this objective truth. You are borrowing from your future to spend now. The reason that you would borrow from your future and spend it now is if you can produce enough growth right now to arrive at your future with more than you would have. That's a very fancy way of saying you can invest the capital today to produce more returns for tomorrow. Now let's look at how we've performed as a country in accordance to that mere fact. With debt to GDP of near 130%, we've borrowed tremendously from our future and haven't produced the necessary growth to pay it back. And so the question is this: do you want to spend less, which is direct correlation to decreasing the quality of life for Americans drastically, taking away their defense, taking away their social security, taking away medical, taking away all the things that they voted for and they want, which is an option. The other is to find the necessary growth to arrive at the future with the ability to pay back that debt. And so you have to shop for growth. And the joke I always say, David, is, you can print many things, but you can't print 18-year-olds. And, the classic way you grow an economy is if your economy is booming and people are making more money and driving more innovation and costs are lowering, they're able to go from having 1 to 2 kids per family to 5 to 8 kids per family. And then those people create more stuff and consume more stuff and your economy is booming. But when we see child per woman going down, when we see life expectancy starting to table off, when we see divorce rates going up, when we see obesity rates going up, depressants going up, that to me says we're not growing as a people and growth is stalling. And so you can't print 18-year-olds. You got to find growth elsewhere. And the proposal is, okay, well, let's think from first principles. What's the fastest growing thing we can own? Bitcoin. How much of it can we own? As much as we want. We are the biggest economy with the biggest balance sheet and the most powerful currency in the world. And well, what does this thing stand for? Well, it's equal rights for everyone. It's global. It's accessible. This to me is pro-technology, right? For a country that delivered a lot of the innovation for the internet. This is right in our wheelhouse of expertise, supporting entrepreneurial efforts. So that's how I arrived there. Is we have a problem. We want to substitute growth as opposed to spend less and decrease the quality of life for Americans. Here we have the fastest growing thing in our backyard. Mind you, David, Coinbase is an American company. Kraken is founded in America. Strike's founded in America. Tether, the biggest stablecoin, sells the US dollar. That's their product. And so we have it all in our backyard. So what else? Anything else you can propose is offering less growth to the table to solve the mathematical equation.
Yeah, that makes complete sense. And look, I think we're going to see more about this SBR, and I think it's interesting. Trump's Treasury pick, Scott Bessent. I think he's like a Bitcoiner who doesn't know he is yet. You listen to some of his talks, you read some of the things that he's written, and it's like everything you have said could be a Scott Bessent speech if you replaced gold with Bitcoin, or if you replaced Bitcoin with gold. I mean, I think we've got an incoming Treasury Secretary or presumptive Treasury Secretary who is super sort of attuned to this. I mean, he said a few months ago that gold was his biggest position. I think for a lot of the same reasons that Bitcoin is your biggest position and my biggest position. And so I do think we are, rapidly kind of emerging into a world where these are all conversations that are on the table that may have sounded, wild a couple of years ago. And again, this journalist today asked me, how much of this do you think is real versus how much of this is just Trump, promising things? And what I told them, which I don't think enough people are really paying attention to, is the election is over, right? So I kind of get everything that happened pre-election taking with a grain of salt, right? You can totally be a cynic and think, well, Trump was just he was running for office. He was going to say whatever he thought would help him win the election.
Mm-hmm.
What people I don't think are really indexing for enough now is that Trump's son was at Bitcoin Mina last week. He was speaking about getting Bitcoin, remonetizing Bitcoin to the advantage of the United States. He was taking meetings with foreign delegations, sort of articulating this strategy. So I think for the SBR piece of this, if you were listening, it is well past the point at which you can just dismiss this as a pie in the sky idea. Regardless of what you think about the strategic Bitcoin reserve, it is hard to stop an idea whose time has come. It may or may not happen in January or February or next year, but keep in mind that the decision about whether or not Bitcoin becomes a strategic reserve asset for nation states is not ours alone to make, right? There's this hubris, I think, that's been involved in a lot of these debates, where, people say, well, if America does an SBR, then, all of these, second order things happen. And my response to that has just consistently been, all of that happens if Russia decides to buy Bitcoin. All of
Hmm.
that happens if China decides to increase its Bitcoin position. So, as we're sort of closing the thread on the SBR piece, I think one point I would just want to leave the audience with is we do not have the luxury of deciding what happens to Bitcoin. Bitcoin is this spontaneous order. It's this emergent phenomena that is, rapidly monetizing. And so the way we need to think about sort of American policy is not, what we wish the Bitcoin network would do in the future, but instead to look at what Bitcoin is doing now, the trajectory that it's on, and decide how we want to react and how we want to position. But I think everything you're saying is incredibly insightful, and I hope gives people something to chew on. If you're interested in kind of getting more into the weeds on some of the criticisms against an SBR, some of the tactical reasons it might make sense, BPI has a lengthy white paper that you should check out. I'm sure that'll be in the show notes. So I want to take, unless you have a final thought on the SBR.
I just wanted to comment as an American entrepreneur. I'm just encouraged by this is lesser SBR that this new administration seems to be pro technology. Very encouraged by that. Like as an American entrepreneur, I want my business to be able to have a bank account, which is obviously in reference to the Operation Choke Points. But more realistically, you can arrive at America should own Bitcoin because America wants AI innovation to be here. America wants Bitcoin innovation to be here. And we want, if there's only 21 million Bitcoin, we want to make sure that we have a sizable position and a position that can support innovation and our ideals and the freedoms and democracy that we believe in, as opposed to a Russia or China. But this administration, to me, the focus on Bitcoin sometimes I think is too heavily weighted. I think Trump has been very vocal that he wants to be pro energy, pro industry, pro innovation, pro technology, and that he thinks that delivering growth to our local economy can help with the deficits, as we just explained and walked through in detail, and that it helps everyone. It drives costs down. It's better for small business. So that is the angle too that I don't want to get lost. Is this isn't pro Bitcoin. I think this administration's pro growth. Bitcoin happens, or pro technology, excuse me. Bitcoin happens to be technology that's growing, but AI as well. I don't think anyone in DC would say, AI is for bad people. I don't trust the shadowy supercoders. Like, who cares if Russia adopts it instead of us? No one wants that position, right? So it's just a pro technology position, which I can say as a 30-year-old entrepreneur in this country, I've never been more excited to be working on what I'm working on, because I feel like my government is philosophically aligned that technology is good for the world and that the story of humanity is engineering a better world.
Yeah, I think it's incredible, and I think the Democrats are going to have to learn from this. I was talking to Ro Khanna recently. He's the Silicon Valley, House rep, and we had a phone call like 2 weeks ago, and we're sort of talking about Bitcoin, the election, and another kind of consequence that I'm super excited about of all of this is I think that the strategic blunder that Elizabeth Warren made is super undeniable now. Like, I think a lot of people developed this sort of overly simplistic heuristic that the Democrats hate technology, the Republicans love technology. I think what we actually saw was that a small faction of people in the Democratic Party were able to wield outsized influence on the areas of emerging technology and finance. And they spun a yarn. They spun a yarn that said that FTX marked the end. Every decision that the Biden administration made vis-a-vis cryptocurrency post FTX was clearly predicated on a premise that that industry's political power, its relevance to the economy, would only go down and to the right. Obviously, that's not what's happened, and I think that I am sort of nominally excited about these younger, kind of more outsider voices in the Democratic Party sort of using this as an opportunity to regroup and say, if we're going to win the vote of Jack Mallers and people like him in the next election, we've got to, it's like the Visa MasterCard thing. I think what we're really seeing is like ideally competitive pressure put on both parties, on the Democratic Party in particular, to get with the program and to
Mhm.
offer a kind of competing uh, view of the world and policy framework. Because you're right, like you can't, if you were anti technology, you're not going to get very far.
Yeah, the story for me is those that were seeking more control. It really it's not only anti Bitcoin, but it's very anti technology. Like we've even seen Mark Zuckerberg be public about his storytelling of when government was seeking more and more internal control at Facebook, driving narratives on trying to control who got access to what information. And I think technology is best served in this country and globally by actually taking the opposite approach, taking a hands-off approach, which is lesser government, lesser rules, lesser control, and obviously giving entrepreneurs a framework to operate within. But that's what I think we're seeing from this administration with things like Doge is Trump is taking a more hands-off approach, which is I don't want to control all your stuff. And that's what I thought our industry and the wider technology industry struggled with is the excess of control. Who can have a bank account? Who can launch products? Who can do what and where? And making bigger and bigger government, hiring more and more staffers to oversee versus the new administration's approach is, we're not interested in overt control over all your stuff. We're going to trust that we have the best people in this country and the best minds and the best technology and the best, access to everything, best university, and we're going to let you build. And that's the pro-American approach that I obviously like to see.
So I want to close out our conversation by talking about sort of the future of Bitcoin. Again, if you are unfamiliar, this whole thing started with a white paper that someone named Satoshi, published on the internet to a mailing list, uh, and very shortly after, left. I think it was funny. I was talking to someone, recently about BPI, someone who works for the government, and their response, to my first sort of, answer was, "Does Bitcoin know you're doing this?" Which was just crazy. And so like, there's this, I think, still like big understanding gap taking place in Washington, about what Bitcoin is, where changes to the code come from. Um, your business, Strike, leverages what we call a layer two, the Lightning
Mhm.
Network. Um, we've tried to do policymaker education. I know a lot of people have. I think people have generally explained, what Lightning is. But I want to sort of look out into the future. Like, if what does Bitcoin look like in 5 years, in 10 years? Not price wise, because obviously, who knows? The SBR could change a lot of things. But on
Mhm.
the technology side, on the application side, where do you see Bitcoin going? Like I think people have talked about this, like sort of layer three, that like the internet itself, Bitcoin is sort of analogous to TCP/IP. And then, you've got this Lightning Network that's making it easier for people to transact. And then people are building, on top of the Lightning Network, right? You're seeing, podcasts, or content models where, creators can get paid in Satoshis. What does the future of Bitcoin as a technology ecosystem look like to you?
Well, I think if we go back to understanding gold, and that gold is a bearer instrument with no monetary network associated with it. And think of all the monetary networks, David, that were born out of that desire that we had money, whether it's dollars or gold or beads or shells, but we had no network to accompany the money. And we built networks to kind of scale in accordance to humanity with the internet and the growth in population. You've got businesses like Western Union and Visa and MasterCard and networks like Swift. Think of like all the inter banking networks like ACH and SEPA and UK faster payments. Now comes along a digital network that can achieve the transaction finality. It can broker the settlement digitally in a physical manner. Think of all that it dematerializes. Um, it theoretically disrupts all of that innovation that was built up over the next 40 years in a very amazing way where it drives value back to the participants of the system, back to those remitting money, back to those selling small, merchant goods and services, brick and mortar. It unlocks new economies, as we mentioned, where if you have fixed costs, that prohibits smaller remittances, that prohibits micropayments on the internet, that prohibits a lot of use cases that we'd probably be attracted to today. So I see the dematerialization of these protocol businesses, these proprietary networks. And if the world can interoperate and coordinate over one giant public utility for value transfer, I envision a much more inclusive world, a cheaper world, a faster world, a world that unlocks more GDP growth with new opportunities, a lot more innovation. So that's the project, I think, for Bitcoin, the network, is to disintermediate and replace a lot of, and it doesn't make these corporations bad. As I mentioned, they were solving a real problem 40, 50 years ago. But if this network can replace them, I think it does a lot of good for the people, and for a lot of the ideals that at least I believe in, where I want the world to be more inclusive, I want it to be cheaper, and I want it to be faster.
Yeah, and that process that you're describing of converging on this protocol, building these products and services, it requires developers and it requires capital. So my last question for you is, we talked about sort of the strategic Bitcoin reserve within the context of the debt, but on a higher level, what does an embrace of technology and of Bitcoin at the federal level do for the rapidity with which those services and products ultimately can get built on Bitcoin? Like in my head, you're a young computer science guy graduating college. You're a young woman that's got an interest in fintech, whatever it is. You've got a choice to make. Do I want to go work on these legacy protocols? Do I want to go work on these new protocols? And if you're an investor, I think you got to be sort of pretty attuned to the sort of reputational, legal risk, et cetera, involved with Bitcoin. How much of that do you think is going away now? Like, if we get an administration that is just very pro Bitcoin, to what extent does that signal to entrepreneurs that it's safe to build businesses on Bitcoin, to developers that it's safe to be a dev, to investors that it is safe to seed these companies with capital? Like, do you, outside of the strategic Bitcoin reserve, how much of that sort of talent and capital do you think is sort of sidelined, waiting for the sort of green light and the thumbs up from the government?
I mean, I have no way of quantifying it, but a massive amount. And people don't have to take my word for it. You can just go look at the Bitcoin chart. As soon as this administration won the election, Bitcoin reacted pretty positively. And I can tell you from firsthand experience, investors that I know, investors of our own, have new energy to this space and what's possible. And I think it's just very pro American. We were, America in its founding, America's arguably the most successful startup of all time.
Yeah, totally.
And I think that we want to be the place that people migrate to and look towards to achieve your dreams, to be ambitious, to change the world, to innovate, to build, to grow. And that's Bitcoin to me. And so I think just the support of the entrepreneurial spirit in this country, that you can come here, we're going to support this technology, we're going to own this technology, we're not going to over control and govern it, and we're going to get out of your way and let you build. Because you're right, David, at the end of the day, what we need, the difference between now and some future state of the world that's much better, is technology built and education. And that's why we do podcasts like this. And that's why we start some of the initiatives that we're a part of. Right. And so I think if we can encourage more of that, that's the most American thing we can do, in my opinion.
Yeah. Well, I am so excited for the future of Bitcoin, the future of you and your company. We are in a really, really exciting moment. And yeah, I guess if there's one message, I think you may have already said it. If there's one message that you have to the people who listen to this and just think, I don't know, this Bitcoin stuff, not for me. I don't believe that this is gonna, go anywhere. What is your main message to the bears. Again, not the bears on the price, but the bears on the utility. I think that claim's increasingly hard to make as we're seeing Bitcoin used in all of these crazy awesome ways all over the world. But what's your message to the person that hears all of this and just says, I'm not buying what you're selling?
I would say, firstly, for Bitcoin, the asset, it's important to understand the size and scale of what it's trying to solve. There's about $900 trillion worth of stuff in the world that people own. About half of that stuff. So that stuff consists of, by the way, equities, so shares in a company, real estate, bonds, actual currency, art, maybe some collectibles. There's $900 trillion worth of stuff in the world owned by about 8 billion people. Half of that stuff, so $450 trillion worth of that stuff, people own just because they want to keep their money. They've earned wealth and they want to keep it. They don't want that wealth to be inflated away. They need it for tomorrow, whether they need to pay their son's college tuition or rent the next month or groceries the next year. They've earned wealth, they worked hard, and they want to keep it. Okay, that's what Bitcoin, the asset, is trying to solve. Is that no one's saying that the dollar can't be the world reserve currency, but no one also is advocating for storing all your wealth in dollars either, right? No one on Wall Street's doing that. And so what Bitcoin is trying to solve is it's the most accessible, equitable, inclusive way for someone to keep their money, which is really important in Nigeria, in Turkey, in Russia, and China, but also in America. And that's a $450 trillion problem. So to put that into size and scale, like we're talking about our debt problem of $36, $37 trillion. Bitcoin can solve a $450 trillion problem for America, which is you don't need to own 10 homes. You don't need the fanciest S&P index portfolio. You don't need to be an expert in Japanese central bank monetary policy. You don't need to pick the right art collection. You can buy this thing, a penny worth of it or $10 billion worth of it, and tomorrow you'll have your money. You'll have your purchasing power. You can get your groceries. The fact that we can support every American in that endeavor of you can work hard and you can keep your money, that's the size and scale of what the asset is solving. Just to give people, can it go up from here? How can we support it? That's a very equitable deed to make sure everyone in the world has access to keeping the wealth that they've worked for. That's fair, equitable. That's a natural human right. That is property rights, in my opinion. And then the network is about using technology to disrupt, innovate, and disintermediate existing corporations that extract wealth and value away from the people. And again, it doesn't make these corporations bad, right? Like Visa is not necessarily bad, but if we have technology that can disintermediate them and drive value back to the consumer and back to the merchant, that's in our best interest as humans. And so I think we have a network that is able to achieve something that was previously impossible, right? We have an asset that has a network accompanied with it. So I describe it as I see more value driven to the edges is what I like to describe it as. Is right now there's a lot of value captured in the middle, in Visa, in the corporations, in the big banks. And how can we get that value pushed to the edges where the money that's sent home, a lot of it gets home? Right. And I think that when you have a public utility that's open source that could do the job of some of the biggest corporations in the world, well, then inevitably a lot of that value gets pushed back towards the edges, towards the remitters, towards those receiving the money, towards those participating in the economy. So that's what I'm hopeful for. And that's what I hope people understand is you have an innovative, disruptive public utility, and then you have an asset that can solve $450 trillion of the world's problems.
That's an incredible message. Well, Jack, thank you so much for being my first
Yeah,
podcast
man.
guest.
As we end, it looks like the sun is setting here in Chicago. Let me pull my blinds so you guys can see my face. But I appreciate you having me, man. It's always a good time talking to you.
Likewise. So yeah, stay tuned for more podcasts in the future. And Jack, we're opening the BPI office with PubKey in DC early next year. So hope to see you at the launch party, and hope to see more of you in DC beating the Bitcoin drum.
I'll be there. I'm always looking for ways to push technology in Bitcoin. So if anyone in DC ever wants to chat, you can just reach out to me. And I will use this platform and opportunity to say we all owe David a lot for his work on Bitcoin and what his team has done. So I really appreciate you, not only for the podcast, but all the work you're doing. It means a lot to a humble Bitcoiner in this now dark closet.
Well, it means the world. Thank you so much, Jack.
All right, brother.